Welcome to the Refurbishment Mastery podcast with me, Martin Rapley. If you're a property investor who is worried about paying too much for your next property, concerned that you don't know how to manage a refurb, or scared that you will be ripped off by a builder, then this is for you. In this podcast, I share over 30 years of experience of managing refurbishments and conversions to help you make more profit, save your time, and ultimately enjoy the process. On with the podcast. Hi guys, welcome back to this episode. It's great to have you here. And you are really lucky in this episode because I'm going to be explaining to you how you can save 15% of the cost of your next building project, assuming you follow the process that I'm going to set out in this episode. You will save 15% on your next project. This actually came about because I put a post on social media recently and got a huge amount of traction, not just on social media, but also people messaging me directly saying how excited they were that there was this way of saving 15% on their next building project. And I kind of was a little bit surprised because I thought what I was actually saying was not that unknown. But clearly it is unknown, and clearly there's a lot of people that didn't realise there is this way of saving 15% on your next project. And what I'm actually going to do is I'm going to go through 4 ways that you can save 15%. So not just one way, 4 different ways that you can save 15% on your next project. So stay tuned if that is something you're interested in. I'm absolutely certain it will be. And I'm certain you're going to get a lot of value from this podcast if you're one of those people who didn't realise this way of saving 15% is out there. The key thing here is this is all relating to VAT. There are some specific types of projects that you can carry out where the VAT that your builder charges you can be reduced from the normal 20% that we all pay in our normal lives. It can be reduced down to 5%. So there are 4 types of projects that I'm going to talk to you about in this episode where the building work is only going to be charged to you at 5% VAT, thereby saving 15%, which is what I promised to tell you all about. Those 4 types of projects that, if you look out for these kinds of projects, will be cheaper to carry out building works in than the normal houses. If you look out for these 4, there is an opportunity to save 15%. Number 1 is that you need to find a property that has been empty for over 2 years. So that's the first thing to have a look for. Could you find a property that has been empty for over 2 years, and could you find some evidence of that? I'll talk about evidence shortly. The second option, could you find a commercial building and convert it to residential use? So commercial to residential conversions, the VAT is only 5%. Number 3, you could take a family house and convert that into flats. So we are creating more residential units. And number 4 is we're taking a family house and converting it into an HMO. So if you're doing any of those 4 properties, those 4 kinds of or working in any kind of those kinds of properties, you can save 15% because your builder should only be charging you 5% for the building works within those projects. And as a result, this opens up opportunities that perhaps other people aren't aware of. And what's really interesting is there's a lot of property investors that aren't even aware of this. There's a lot of builders that aren't aware of this. And as a result, those of you that know about this potentially can make better offers for the same kind of properties, even ahead of other property investors who aren't aware of this legislation. And if you really want to investigate it all, just Google VAT or construction VAT regulations. You'll find an HMRC paper all about VAT on construction projects. It's quite a big document, although it's not overly difficult to read. Even though it's HMRC, it's reasonably clear to read, and buried within there, you will find talk of these four examples that I was talking about earlier. So, how do you go about benefiting from this reduced price? I have touched on this in the introduction, but the key thing is you need to engage a VAT registered builder. This only works if you are working with a VAT registered builder. Now, that you will know actually as of the time of recording this, which is towards the end of 2025, the VAT threshold is £90,000, which means if anyone operates a business where the turnover goes over £90,000, they have to register for VAT. Now, in reality, if you're running a construction business, it's quite hard to stay below £90,000 unless there's perhaps just you and a mate. If there's just two of you, particularly if you're getting your clients to buy some of the expensive materials, a little two-man band could probably just about stay below the VAT threshold of £90,000. Anyone bigger than that, any business bigger than that, is going to be over £90,000 unless they are a brand new business and haven't yet reached that £90,000 threshold, so perhaps haven't registered, but in due course they will get there. When I ran my own construction company, I'd done about £90,000 worth of work, probably in only 6 months of trading. It didn't take long to hit the VAT threshold. In fact, it was lower back in those days, but it didn't take me that long to actually get to that threshold. So generally, most builders are going to be registered for VAT. So when you're first engaging with builders, and you may do this at the point where you are first tendering the project out, or you might do it a little bit later, but you certainly want to be doing it before you're appointing the builder, you need to tell them that you believe that VAT can be reduced on your project because, and it's going to be one of those four reasons that I gave you earlier. It's been empty for over 2 years. It's a commercial to residential conversion. It's splitting a house into smaller units, or it's splitting a house into an HMO. They're the common four ways that we as property investors could get some benefit from this. And you need to so just engage with the builders. Many builders will be totally aware of this legislation. If they're not aware, then I would suggest that they talk to their accountant, and their accountant should be able to find the documentation, and then all is good. So first thing is you need to engage a VAT registered builder. Secondly, you need to tell them that you believe the project can be working with reduced VAT. The next thing is that ideally you need to provide some kind of evidence to the builder that you are fitting into one of these criteria. And the reason for this is because as with so many things taxation wise, the onus is with the builder. So it is with the builder to charge the right VAT for each project. And when and if the builder has a VAT inspection at some point in their business, they could be asked for evidence that they correctly applied the 5% rate. Now, in reality, this is down to the builders to look after their own corners here. But I like to look after my builders for them. And so I will always make sure that before we start, they've got evidence that they're happy with. Some builders won't do anything without any evidence. Some are a little bit more haphazard, and could get themselves in problems. And I don't want that to happen for any builder. So, because if HMRC catch up with them, that might be in an inspection in 4 or 5 years after the project's been finished. They might not be able to track you down. They might not have your details. You might have moved on. You might have wound your business up. So they don't want to be in a position where HMRC come back to them and say that they've underpaid VAT and they can't get it back from you. But in turn, you don't want to have to reopen something up years later to try and prove that you paid the right VAT. And if you can't prove you paid the right VAT and you're still trading, obviously the builder can come after you to make up that 15% shortfall. Plus, I would assume interest that HMRC are going to levy. So it's really good practice to find some evidence. So, what kind of evidence do you need to look for? Well, first of all, if we're talking about an empty property, can you find utility bills that show negligible usage? So you might have a standing charge on the electrics, but what they'll find is there's hardly any usage, maybe a little bit of usage. You could justify a little bit of usage. Maybe you've got a security alarm in there. So there's a tiny little drain. Maybe you're going in there periodically, checking the property's all right. And when you do, you need to turn the lights on. So there is a little bit of usage, but you can prove that that usage is way below what it would be if it was a habitable house. So bills can be quite a good thing. Back in the day, council tax bills were really good because you got a reduction or even it was free when the properties were empty. Less local authorities are allowing that now. So that doesn't work quite as well. Now, you might be able to get evidence from an estate agent that you're buying the property from. Maybe the estate agent knows that the property has been on the market for a long time. Maybe there's been a number of sales have fallen through, and actually it's ended up being 2 years. You can actually get a statement from the estate agent to say they started marketing it on this date. And of course, the property is empty whilst you're doing building work on it. It's not being lived in. So I've even delayed the start of building work to make sure that it's empty as of the day the building work starts. So you can manage this, and the estate agent could be someone that will help you with that. You might be buying the property through probate or as a result of probate, and it may well be that you can say, well, the person who lived in this property passed away on this date. Here's all of the probate information. We can see that there's a 2 year window in there as well. So you're looking for evidence like that to evidence that the property's been empty for at least 2 years. Now, as far as commercial to residential conversions go and family houses into flats, the best evidence you will have is actually planning permission. If you've got planning permission for that conversion and you subsequently do that work, which is what the builder is invoicing you for, then that is all of the evidence that's needed. So in the situations of commercial to residential and family houses into flats, the evidence is really, really easy to come by. You likely have already got that, and it's on your radar anyway. Converting a family house into an HMO can be a little bit trickier. If you've needed to get planning permission to do that work, so perhaps you're in an Article 4 area, or perhaps you've got a sui generis HMO and you've had to apply for planning permission, then those drawings will, and that planning permission document will serve as the evidence you need. So that's very easy. If you're taking a family house and literally converting it into a 5 bedroom HMO, so it wouldn't need planning. This is assuming it's outside of an Article 4 area. So if it doesn't need planning, you haven't got anything of official confirming that you're doing the work. The final way that you can actually evidence this is that your builder can ask you to sign a pro forma declaration that basically says, I, property investor, confirm that I am appointing this builder to carry out these works to convert a family house into a 5-bedroom HMO. And then you'll sign another little bit. You'll need to, there'll be another little clause in there as well that will say that if it's subsequently found that this work is not um, converting it into an HMO, or within a certain period, and I don't know what that period is, but it would be on the government pro forma form that you'll be able to find. But if within that period it gets converted back to a house, then I, as the owner of the property or the person instructing the work, will make up the shortfall in the VAT. So that won't be a problem for you to sign that if you've got every intention to convert it to an HMO and leave it operating as an HMO. But if you are looking at, if you're not sure and you think it might change, be careful because you could be liable for repaying some VAT. So, do be careful on those kinds of projects. I did a project a number of years ago where we converted a house into an HMO, but it was in an area that we didn't really know what the market was for HMOs. And we always said we might have to convert it back into a house. Now, in the event, the property actually has worked perfectly all right as an HMO. And we are now at a point where we're over 5 years. And we're going to keep it as an HMO anyway. So I would think, I don't know what the period is. Do double check the period, but I would think it's not going to be more than 5. If it is, it's not going to be more than 6. That's very rare that anything goes beyond that in any kind of legal stuff of this nature. Just jumping in to make sure that you've got everything you need. Now, in a number of these podcasts, you'll have heard me talk about other property investors that I'm currently working with or have worked with in the past. And so I wanted to ensure that you can find out how you can actually work with me. And the best place to start with that is my website, www.refurbishmentmastery.com. On there, you'll find details of training courses that I run. You'll find details about my community and also how you can work with me on a one-to-one basis when you are progressed far enough down the line. And then if you're not really sure what's right for you and how we can work together, then there's a button at the top. Just hit the button at the top that says book a call. It's absolutely free. It will take you to my diary, find a slot, and we'll be able to talk in the next couple of weeks. Remember, the website is refurbishmentmastery.com. I really look forward to helping you with a successful delivery of all of your projects. Now back to the podcast. Now, the other thing to make this work is you need to ensure that your builder buys everything. So this does mean that you can't pop round to the local kitchen supplier and buy the kitchen and expect to buy that kitchen with VAT at only 5%. The mechanism of this reduced VAT working can only be administered by builders. So builders will still buy materials at 20% from the merchants, kitchen suppliers, bathroom suppliers, all the bricks, the timber, plaster, everything else they need. They will buy that at 20% VAT. They will then invoice that work onto you at only 5% VAT. And when they do their quarterly VAT assessment, they will make a note in there that they have bought at 20, they've sold at 5, and because there's a difference in the middle, that will all come out in the wash in the VAT that they end up having to pay on to HMRC on a quarterly basis. Companies that are doing refurbishment kind of work shouldn't lead to any cash flow problems for them. because they're still charging you VAT on their labour, but they're not obviously incurring any VAT on their labour. And if they bring in specialist subcontractors, there's legislation that means that those subcontractors don't have to charge them VAT. So as a result, this shouldn't lead to any cash flow problems. But it does mean that because they buy at 20, they sell to you at 5, there's the merchants where you buy your kitchen from don't have any way of selling that kitchen to you at 5%. They can only sell at 20%. And because you're not registered for VAT, you can't claim that VAT difference back. So you do need to make sure that your builder buys everything. And this is something that comes up every now and again, and perhaps some of you hadn't realized, but this is where you need to be very careful. If you are a member of LNPG, Landlords National Purchasing Group, then LNPG's rules say that you have to go and buy your products, or did say, they may have changed, but I haven't worked with them for a long, long time. But the LNPG's rules used to say, and may still say, that you have to go and buy your own products. You can't get the benefit of this 15% saving. So if you are buying through LNPG suppliers, you now need to ensure that they are not just cheaper than your normal suppliers or your builder suppliers, that they're actually 15% cheaper. And for me, because in some cases they might be close to 15, they might be a little bit more, I just don't even bother with the aggro. So I'm personally not a member of LNPG, haven't been a member of LNPG for years, because I just found that I wasn't getting the benefit from them because I was doing work where the VAT was going to be reduced. The last thing I bought from them was actually furniture, which doesn't fall under this anyway. And even now, I don't buy furniture from them because their preferred furniture company doesn't like delivering to the bottom southeast corner of Kent. So we have to buy from other suppliers anyway. So do be careful if you're buying through LNPG. Nothing wrong with the concept of LNPG, but not so good in the 4 situations where VAT might be reduced. Absolutely, LNPG works for single let properties, serviced accommodation properties, those kinds of things, but and refurbishments and maintenance of your existing stock all works for that. Not necessarily quite so good for those 4 examples I've just given you. So, some ways to save VAT, some ways to make this work, but some things just to watch out for or to be aware of. First of all, this only applies to the building works themselves, the works carried out by your builder. It doesn't apply to consultants, so architects, quantity surveyors, engineers, project managers, all of those people still need to charge you at 20% VAT. It relates to the building works only. And when I say what relates to building works only, that is actual building works. It doesn't include carpet, appliances in the kitchen, fitted furniture, that kind of stuff. So don't be surprised if your builder pulls those bits out and puts them on another invoice. To be honest, as in HMO type situations, we don't very often put in fitted furniture. We might put in some appliances, but I tend to buy my own appliances. I tend to buy my own carpet and get my own contractors to lay carpet. So I don't get involved with that through builders. But just watch, if you get your builders to do the work, they should abstract those elements out. In the small print, it also said that you can't include plant and plant hire costs. Now, most builders don't read the small print, so most builders probably will reduce the VAT on plant. Day-to-day plant isn't really a problem. No one will really be concerned about that. But the plant that could cost more money is actually scaffolding. So the cost of putting scaffolding up, technically, if you read the small print, is not building works. It is all about facilitating building works, and as a result, that can't or shouldn't be reduced. However, most builders don't know that. And that's not something I typically flag up to builders. Once I've agreed that we're talking about a discounted project, then we're off and running, and I don't tell them about scaffolding. But they might get caught for it in the future. It depends how they present things in the future. But in theory, you could have a builder that says, I can't run the scaffolding through that. And that's because that builder's a bit more aware, probably had some guidance, perhaps from an accountant, or maybe even learn the hard way in the past. So do just watch out for those when you're talking to your builders. If your builder won't accept that there's a reduction for whatever reason, they're not prepared to read the documentation, they're not prepared to implement it, they're scared that it's going to disrupt their cash flow, their accountant tells them that it's a made up thing and you can't do it. If for any reason the builder won't accept it, there is nothing you can do. So you can't force them to accept it. They are the ones that take the responsibility for getting this right. And if for whatever reason they're not happy that they can get it right and they say no, all you can do now is compare the price of one builder who might be more expensive on face value, but only add 5% on, with the builder that's maybe a bit cheaper, but is going to add on 20%. And maybe it makes a difference to the pricing. Maybe you go to a different builder. So, and this is where you'll start to see the smart builders winning work. So, a builder that does work for me on a regular basis, he'll message me every now and again just to confirm that he's understanding the regulations right, because he will say to clients, I think I think I can reduce the VAT for you on this to 5%. And he'll tell clients that don't even know about that. And as a result, he gets more work as a result. So switched on builders will already be talking to you about this, but that's not to say you shouldn't be using the builders that aren't aware of it. And if they're not aware and you bring it to their attention and they're happy with it, you're good to go. But if they're not happy with it, there's nothing you can do, and you may want to choose to go and work with a different builder. Now, in theory, if we're adding additional bedrooms to an existing HMO, in theory, we are creating two additional dwellings, and creating two additional dwellings, in theory, means that we can reduce the VAT to 5% on that element of the work. Not the whole refurbishment of the HMO, but the element to create two extra bedrooms, which you might do if you're perhaps doing a loft conversion. However, my experience over the last 10, 12 years is that is a really grey area. And if you're going to push the boundaries or persuade the builders to push the boundaries, that might well be too much for a lot of builders. So the last time I actually did this, I actually ended up working with a builder who was reasonably newly set up. And so they weren't even VAT registered in the first place at that point. I think it was the first project they'd done. Even though I knew the builders, I knew them through a different setup. So I didn't have to. We didn't even need to have the conversation about it in that situation. But I'm not sure I've ever met anyone who has managed to reduce the VAT on the refurbishment of a property where they've created an additional HMO bedroom in an existing HMO. And personally, the difference is getting quite small at that point. If you've already got a room, and what I ended up doing was I split a big room into two smaller rooms. So the extra over cost was pretty negligible, really. We built a wall down the middle and we put in an extra window, but otherwise everything else was pretty much included in the cost of refurbishing the one big room. So, in that respect, it just wouldn't even have been worth trying to save the VAT. It was negligible. It's a grey area. So, whilst in theory you can do it, I wouldn't push that, and you might choose not to even discuss that. In some cases, it might be possible for you to set yourself up as a VAT registered business. I don't think it's many cases. I can't give you any advice on that. You would need to take your own taxation advice for your own particular circumstance. My view is at that point, you're heading more towards running a business as a developer. Nothing wrong with that at all. And great if you're going to perhaps grow in the longer term. But there is other tax legislation and indeed other health and safety legislation that you need to take on board at that point. So by and large, this is very much from the perspective that we're not talking about running our own VAT registered business that can get the benefit of this. Therefore, hence we need to engage a builder. And just to be clear, my training business is VAT registered, but my property investment business is not. And I can't put the costs through my training business to claim a reduction, because my training business would then have to sell it on to my to my final to my property business, and that all then becomes complicated because now I'm selling something that I don't actually, my company's not set up to do. So it all gets complicated. So take advice. There could be reasons why it works for you, but my observation is it doesn't work for many people. So you do need to go down the route of engaging a VAT registered builder. So there we go. That's how you can save 15% of the build cost on your next project. Look for the right kinds of properties. So empty for 2 years, commercial to residential, family house into flats, family house into HMO. Look for those. Engage a builder to sort out all of this for you. Give them the right evidence that they need to ensure that they're happy. And at the end of the day, you've saved 15%. Hopefully, as a result of listening to this podcast, you've now got some different ideas. Maybe you're looking at properties slightly differently. Maybe you're going to start looking for different properties. Maybe that property that is clearly empty, you could do some more research into and establish when that 2-year window might open. It could be that at the moment, the property's only been empty for 16 months. Fine. By the time you buy it, that could easily be up near 19, 20 months. Could you hold it empty for another 4 months to save 15%? Is there an opportunity here, particularly if you need to get some planning permission and you want to, you could have all your builders lined up, or your builder all lined up ready to go, and then press the button to go the day after. Well, in fact, even the building work period counts within the 2-year period, but in theory that 2-year period does need to have completed before the builder does their first invoice. So that might buy you another month or so at that point. So you can start to look at these projects in a slightly more creative way. So as I say, really hope that you've got some ideas and inspiration from that. I've got more ideas and inspiration on all of my other podcasts, and of course in future podcasts coming up. So I really look forward to catching up with you on some other podcasts somewhere along the way.
Thanks for listening to this podcast. Please do like, share and leave a comment where you can. If you need any guidance or advice with anything to do with your refurbishments or conversions, then don't hesitate to reach out. You can book a free call with me by clicking on the link at the top of my website, refurbishmentmastery.com. There's other ways you can contact me in the show notes as well. I look forward to speaking to you again soon.